Hi everyone, this is Property Mommies at PropertyMommies.com. This is Brittany Wynn with Keller Williams Partners.
And this is Gayla Bustos with Keller Williams Partners.
Today we're going to talk about the myths and misconceptions of using your VA loan. And we have our VA guru, Chris Frankenmont with North Point Bank here to answer all of our questions.
So our first question for Chris is, how many times can you use the VA loan?
So there's not really a limit on the number of times you can use a VA loan. It does change a little bit from your first time use to subsequent uses. So the first time you use that VA loan, if you're using it fully financed, no money down, you're going to have a VA funding fee of 2.15%. For every subsequent use, that funding fee goes up to 3.3%. But you can use it as many times as you want. So after you've used it and you sell that house, we can restore your entitlement, and you can use that entitlement again on another purchase.
Are you able to have are you allowed to have two VA loans at the same time?
You can have two VA loans at the same time. So if our veteran bought a house with a VA loan, wanted to keep that house as an investment property and use their VA loan to buy another house, they can do that. However, some of their entitlement is going to be tied up in the house that they're retaining with the VA loan. So they're a little more limited on how much they can fully finance with the next VA loan, but you can have more than one house with it. If you want to talk details, we could look at a specific situation.
And you mentioned the funding fee. Can you tell us more about that?
Yeah, absolutely. So any conventional loan with less than 20% down, or all FHA loans, you have to have what's called private mortgage insurance.
Right.
Came about after the housing market collapsed, essentially insurance if the borrowers were to default on the loan. For a VA loan, there's no mortgage insurance, which is awesome. Instead, they do have a VA funding fee. That funding fee gets financed into the loan, so it just increases your loan amount a bit, but it's still a whole lot cheaper than mortgage insurance. So like I said, the first time use, that funding fee is 2.15%. So for easy math's sake, let's say you're buying a $100,000 house, your base loan amount is $100,000 because it's fully financed, but then you have that funding fee of 2.15% that gets financed into your loan, so your total loan amount would be $102,150.
Okay. How do you know if you qualify?
So the easiest way is to get a certificate of eligibility from the VA. You can do that a couple ways. You can contact the Office of Veteran Affairs and they can pull one for you. Or if you call myself, I can pull one straight from the VA portal. 95% of the time it'll pull through automatically with just your date of birth, social security number, first and last name. Sometimes we will need a DD-214 or other service record if it goes to a manual application, but 95% of the time I can just pull one over the phone in 30 seconds.
So it's pretty simple.
Definitely.
How far in advance should somebody start getting pre-qualified?
Well, with the VA loan, you have to occupy the property within 60 days of purchasing it. So if you were PCSing to Colorado Springs and you were going to be here at the beginning of August, you could close on that house at the beginning of June as long as you occupied the house within 60 days. So realistically, 3-4 months before you're coming out here, you may want to get pre-approved and start looking in case the right house pops up.
Awesome. We get this a lot. Can you use your VA buying a new construction or new build home?
So you can use it for a new build, not a new construction. And kind of the difference there is a new build home is one that a builder's building and they're eating all the costs of building that house. You don't have to pay any, you pay your earnest money like a normal house, but they're doing the cost of construction. They complete that house. When you buy it, it's technically a existing house that has not been occupied. A new construction loan is a loan where you're actually working with a general contractor, you're building the house, the bank is paying the contractor during the process as the house is being built, and that loan cannot be used for a VA loan.
Okay, so basically you're saying we cannot buy land using the VA loan.
Correct. You can't use the VA loan to buy land and then build a house. You would have to use conventional loan products to do that. You can only really use the VA loan, like I said, for a new build house that's being built by an established builder who is literally taking on all that cost until the house is completed.
And then after, say you were to build your own house and use conventional, you can refinance into VA?
Absolutely, absolutely. So you could buy the lot with cash or with a lot loan. We have some excellent lot loan programs. Utilize a conventional construction program, and after the house was complete, you could refinance that into a VA loan.
Okay. With the VA loan, can you purchase a multifamily property?
You can. So the big thing is you have to occupy one of the units. So if you're buying a duplex, you need to occupy one of those two. If you're buying a fourplex, you need to occupy one of the four, because it's not to be used for investment property. you have to use it for a primary residence. So as long as you're going to occupy one of the units, then we could use it for a multifamily.
Okay. So join us next week. We are going to be going over the difference about buying a home versus renting a home and the benefits that buying has for you.
Chris, hit us with the tip of the week.
Tip of the week, if you're currently in a lease and worried about breaking that to buy a home, these property mommies can help you with getting out of that lease without paying anything. So give them a call and they can talk you through some details.
719-822-1-MOM.
We'll see you guys next week.
Bye.
Bye.